Most people don't want to believe this, but you don't need to make a lot of money to become a millionaire. If you can invest $4 a day, or even just $100 a month, that's less than $4 a day, you can become a millionaire. Numbers have showed us this from history. If you can invest $100 a month, that's less than $4 a day, and you can get an average 10% return on your money a year, and you do this for 46 years, you will retire a millionaire, which means if you start at age 21 and you start investing $100 a month and you never invest another penny besides the $100 a month, you will retire a millionaire. Now, the first question you're going to ask is, but Jaspreet, where am I going to get a consistent 10% return? Well, if we look at history, the S&P 500, which is the largest 500 companies in the stock market, have on average over the last century grown by around 10% a year. Even though we've seen recession after recession after recession, even though we've seen market crash after market crash after market crash, on average, even despite all these downturns in the economy and the market, the S&P 500 has still grown on average by 10% a year over the last 50 years, over the last 100 years. Now, you don't have to go and invest individually into each one of these companies. There are funds that will allow you to invest into something like the S&P 500. Again, the S&P 500 is a group of the 500 largest companies on the stock market. If you go to your stock brokerage, I'm not telling you what to invest, and I'm just giving you an example. Always do your own due diligence. Never trust a random guy on YouTube investing as risks. You understand all that. If you went to your stock brokerage and you bought shares of SPY or VOO, as a disclaimer, I own shares of VOO. Both of these are ETFs that give you exposure to the S&P 500. So now, if you were buying the S&P 500 $100 a month from the day you turned 21 to the day you turned 66, you would have retired a millionaire on that $100 a month. Now, of course, yeah, this is looking back in time, but that's what would have happened if you made those small incremental investments, which is why it's so important to get started, even if you don't have a ton of money to start, because most people have the ability to put aside $4 a day. Now, your next question is going to be, but Jaspreet, by the time I'm 66 years old, $1 million is going to be nothing. And sure, $1 million today is going to be worth more than $1 million in 30 years or $1 million in 20 years. You're 100% correct. But you also have to remember, I'm talking about investing $4 a day and never adjusting how much money you invest. If you start with $4 a day today, $100 a month today, and then as your income grows, you also start investing more money. Let's say you start investing $100 a month today. Next year, you invest $105 a month. The year after that, $110 a month. The year after that, $120 a month. Guess what? You're not going to have $1 million when you retire. You're going to have more than $1 million. So yeah, the value of $1 million is going to adjust with inflation as time goes on, because inflation is still here. Inflation is going to be around today and 10 years from now and 20 years from now and 30 years from now. But you can also work to match that by also increasing how much money you invest. So now the question is, well, what's holding so many people back? And this is where we have, well, a lot of things happening. Number one, it is no longer access to technology, right? I mean, we have so many tools now in our tool belt that allow people to start investing their money very simply. That's the great part. I love that part about fintech, is that investing has become so accessible for the average person, for anybody, that anybody can start investing with as little as even $1 now with some apps. The downfall now, the double-edged sword to this is people have access to this financial technology to start investing, but the financial education is lacking. And this is where now people get caught up in the wait. You're telling me that if I invest $100 a month for 46 years, I'll become wealthy. But if I put $100 into this meme stock or into this cryptocurrency or into this particular thing that's going to boom in 6 months, I could 10x my money way faster, and I don't got to wait to become wealthy over the long term. Now we have the exciting and the attractive and the fun side of investing, which really isn't investing. It's trading, it's gambling, it's speculating. Look, there is a place for trading. It's not for me. I don't trade. I don't know how to trade. I've tried trading before. I spent a lot of time trying to figure that out, and I didn't make any money. In fact, I don't even know if I lost money, but I probably lost a little bit of money doing that, but I lost a whole lot of time. Over the long term, what we have seen again and 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 again are the investors, the long-term investors are the people that will make more money over the long term, period, over traders. When times are good, the economy is booming, money is flowing, interest rates are low, everything's going up, traders will make a lot of money. We've seen that happen. And then that's when people get attracted to, wow, this person made so much money on this trade. Wow, I can't believe how fast you made that much money. Wow. Do you think I should come in too? Do you think I can make the type of money too? And that's what gets a lot of people excited to start throwing their money into things that they don't understand, whether it's cryptocurrency, whether it's meme stocks, whether it's other stocks, whether it's penny stocks, whether it's anything. People will start throwing their money into things before they understand them. Because you think, what if I can also see those big returns? But the reality is, those returns are fleeting. If you get in quick enough and you sell before it busts, yeah, you can make a lot of money. But it's a game, and this is an active game, and it's a game that many people, most people, will lose money in. And that's where now you have to understand the right way to do it yourself. Now, you might be saying, but Jaspreet, don't you invest in cryptocurrency? Yeah, but I'm not trading. I understand a different way of investing, right? I buy cryptocurrency every day, and it's a small piece of my portfolio. It's the speculative part of my portfolio. And so for me, I don't look at buying my investments like a trade. I'm looking at things 10 years down the road and what this will be worth to me then. And I don't advocate anybody to do what I do. I want you to take your own education and invest in what's important to you. So now, if you can become a millionaire with as little as $100 a month, and you can make even more money if you invest more money, the next question is, well, what's stopping people? So it's not the technology. Now, we talked about the financial education. The last thing is, well, do I really want to wait that long? And now we get into this whole investment overload, this education overload. And it's the same with so many industries, right? The good part about social media is now people, you have access to unlimited education for free. You can go and learn about how to lose weight. You can go and learn about nutrition. You can go and learn about money. But there are so many opinions. In the health and fitness space, there are so many opinions about what's the best diet. Is it vegan? Is it carnivore? Is it keto? Is it whatever, intermittent fasting, whatever the other diets are? There's so many options. And so if you're just getting started and you start learning about all these options, you can very quickly be overloaded with it and say, you know what? I'm just going to stick with my donuts and cream cheese and I'm going to be good with that. We see it happen all the time with money, where people start looking at all their options. Okay, I got ETFs. That looks cool. Oh, index funds. Oh, what about mutual funds? Oh, real estate. Syndicate real estate deals, crowdfunded real estate deals, private equity deals, lending money. Oh, and now all of a sudden you get bombarded with all this information. And then you have a lot of people saying, you have to invest in this one thing. This is how you build wealth. When most of the times when people are telling you have to invest in stocks, or you have to invest in real estate, or you have to invest in options, most of them have their own agenda as to why they think there's nothing else out there. In reality, you can invest in whatever it is that you want, assuming it's a good investment, right? You can invest in stocks and build wealth. You can invest in real estate and build wealth. But you have to find the right option for you. And the mistake that so many people make, and the reason why so many people don't become wealthy from their investments, isn't because they made the wrong investment. It isn't because they invested into something with the wrong expense ratio. It's because they never got started. There are 3 factors that will determine how wealthy you will become for your investments. It is number 1, time. How long do you invest your money for? Number 2, dollars. How much money are you investing? And number 3, return. What is the return that you can get on your money? You can work to improve the return, and you can work to improve the dollars. The one thing that you cannot change is time. We cannot go back in time and start investing 10 years ago, but we can get started today. That is the one factor that we cannot change. And that's why it is so important to just get started. You don't have to make a commitment, a life commitment today with your investing strategy. You can start investing in ETFs today and then 6 months later say, you know what, I'm going to invest in index funds, or I'm going to invest in mutual funds, or I'm going to invest in real estate. That's okay. You will change because you're going to learn. You're not going to know everything going into it, but you have to get started. Time is the only factor that you cannot change. You can change how many dollars you invest, because what happens to a lot of people is you start investing and you get into this whole game of, oh wow, I'm starting to understand this. I'm starting to see that light at the end of the tunnel. I'm starting to see what it would be like to compound my money. You start playing with those compound interest calculators online, and you start to see what it would be like for your money to compound. And that's when you say, I need more money to invest because I want to put some fuel on this fire. And that's a great feeling when you get there. The first thing that a lot of people do when they get there is you stop eating out. You stop going on vacations. You stop spending money. And, that's something I think most people need to do in the beginning, that way you know how to live below your means, know how to make those sacrifices. But then the next thing is, how do you work to earn more money? And the reason why you're working to earn more money now isn't so you can drive a faster car or a bigger home like most people are doing. It's so you can invest more money. So yeah, you can change how many dollars you invest, which will impact how wealthy you become, because the more money you invest, the wealthier you can become. But then the third factor you have to also work on is the return. How can you get the highest return? Now, the way you can get the best return is, number one, you start building that financial education. You learn how to make better investments. You learn how to, make better things, make better decisions with your money, that we can get a better return, but also pay less money in fees. That way, more of that return goes in your pocket. So you can work on the return side. You can work on how much money you invest, but you cannot change how much time you have, which is why you have to get started sooner rather than later, because the longer your money has to compound and grow, the bigger your wealth will be. And the most difficult part about this is that concept of delayed gratification, because again, in today's society, when we want something, we want it today. When we want a luxury handbag, we want it today. You buy it with 0% APR. You buy it with a no interest credit card. You buy it with buy now, pay later. It is so accessible to have whatever we want right now. And that is what got a lot of people into the tough financial places that they are today, because we want convenience. Amazon was built on the whole concept of convenience, where now I don't have to go to the store to buy something. I can buy it online. Now, don't get me wrong. I love shopping on Amazon. I barely go into the store. I don't like going into stores to shop because it's a waste of my time. I love this idea of convenience. But the whole model was built on convenience. And now it's one-click purchase. You want to buy a new laptop? You can buy it with one click. You want to buy a new microphone? Buy it with one click. Getting whatever you wanted has become so convenient. And then came, okay, you want to buy a laptop you can't afford? No worries. You don't have to afford the laptop. You can buy it, pay it later. You can pay it in installments. And this is where now the convenience is starting to impact people's finances, because now we're saying, all right, you can go and spend whatever it is that you want. Just worry about the price later. And there's a reason why buy now, pay later, 0% APR are so profitable, right? Buy now, pay later, as I like to call it, broke now, broke later, is one of the fastest growing fintech industries out there. Why? Because there's such a big demand for it. Why is there such a big demand? Well, number one, inflation is still extremely high and the cost of living has gone up so quickly. And then number two, people love having things now. We want to have things today, and that has caused the boom of things like buy now, pay later. But now let's think about this for a second, because the whole idea is, or the marketing pitch is, 0% APR. You don't got to pay any interest for this. And so what a lot of people think is, I found a special loophole that I can have more stuff today. It doesn't have to cost me anything because there's no interest, and I get to have all the nice things. So I found this little loophole in finance. But let's think about this for a second. There's a cost to money. There's a cost to borrowing money. Because, if borrowing money was free, banks would not charge you interest to get a mortgage. So if businesses or these buy now, pay later apps are giving you money for free with buy now, pay later or 0% APR, how are they making money? Well, they are making money. In fact, it is extremely profitable. So how? Well, the first thing is they know that if they can sell you a computer on buy now, pay later, you might also buy a mic with buy now, pay later, because you don't have the pain of paying, $3,000 for these laptops now. So now you might buy a mic to go with it. Maybe you'll also buy a camera to go with it. Maybe you'll also buy a handbag to go with it, because now you can buy all these things on buy now, pay later, and instead of paying that $3,000 up front, you can just pay $100 a month for each thing. You don't have the same pain of that money leaving you, so you're going to end up buying more stuff. So the first thing is buy now, pay later encourages people, and statistics show this, the majority of people will buy more stuff. Number two, it's, okay, so now I start buying all these things, and then I have all these monthly payments. If I don't pay it off in the 9 months or 18 months that's given to me, I'm now going to be slapped not with a 5% interest rate, but with a 28 or a 35, maybe even a 39% interest rate. And so now all of a sudden, buy now, pay later went from this, oh, it's a special loophole that allows me to have more stuff without paying more money, to I am paying so much extra to buy all the things that I didn't know that I didn't need, that I couldn't even afford in the first place. That's why these programs are so profitable. And this is where now you have to make that decision. What do you want first? Do you want the nice things, or do you want the wealth? And if you're watching this video, I know what it is that you want. You want that wealth first. So you have to switch the way that you think, because the reality is the majority of people will never understand this, right? We're raised in this consumerism culture, and it's very unfortunate. And if you want to break out of that, the first thing you got to do is you got to change your mindset as to what it is that you want and when you want it. Now, when you can change your mindset on the way you spend, you can change your mindset on the way that you invest, because it goes hand in hand. It is your brain strings work the same way when it comes to long-term thinking. If you want to have all the nice stuff now, what makes you think that you're going to be able to invest for the long term and build your wealth that way? If you want all the nice stuff now, you're going to want to invest your money and grow it the same way. And what ends up happening is when you want the quick returns in your money, well, you're probably going to be the one that loses your money and pays for somebody else's long-term gains. And so now you lose both ways. And then you start hating the investing game. You start hating the system. You hate Wall Street. You hate corporations. You hate banks. And you just get into this whole system of just working to pay your bills and never wondering why you can never get ahead. But it starts with your mindset now. If you want to break out of this system and really build true wealth for yourself and your family and your community, and build true generational wealth, it starts with your mindset. Where now, okay, when I spend my money, I'm going to spend what I can afford, meaning money that's coming out of my pocket with cash, not going into debt to buy these things. Now you understand, okay, yeah, maybe I can't buy the nice laptop today. Maybe I can't buy the nice stuff today. I got to downsize because I want to be able to afford it with cash, especially when it's liabilities, something that's not making me any money. You got to make sure you're not buying things that you cannot afford. The simplest thing you can do is follow something like my rule of 5, which says if you can't buy 5 of them, you can't afford 1 of them. Then you reframed your spending. Now you're going to start reframing the way you invest. Now you're going to understand, okay, we're working the long game here. We're working to build that wealth now. Okay, I can build wealth. I can become a millionaire with $100 a month if I have enough time. I need to just get started. And this is where now you start investing. And again, there are so many ways to invest, but you got to just get started. Start doing your research, start reading books, but also get started by putting your money aside to start investing. Then as you do that, that's when you start learning. And as you start to learn, maybe you'll change your investing strategies. Maybe you'll say, you know what, I want to invest in stocks instead. Maybe I want to invest in individual companies instead. You will start to learn, but you have to start building that discipline, because now investing is a long-term game. The people that build the most wealth are not the people that hit something quick, that hit the lottery in the stock market. It's people that are working to build long-term wealth. There's a saying, this about Warren Buffett, who says when the tide goes out, you see who's been swimming naked. And what that means is that when the free money, when the economic boom goes away, you see who's been living this fantasy lifestyle where they've been living high off of the economic boom. But then when you see that money and that whole system start to slow down, those people are the first ones to lose everything. And it can be very easy to fall into that trap because it's a very emotional thing. Oh my God, yeah, why would I want to wait to get rich when I can get rich now? I mean, get rich slowly is not a very attractive term. If you had the option to get rich quick or get rich slowly, 100 out of 100 people would pick get rich quick. But the reality is most people don't. The vast majority of people will never get rich quick. It's get rich slowly. Yet we get attracted to the get rich quick because our emotions go this way if our mindset is not wired to understand that this get rich quick is probably going to fail. We look at the opportunity, but we never look at the risk on the get rich quick. But what's interesting is when we look at the get rich slowly, now, instead of looking at the opportunity, we're looking at the risk. The risk is, man, that's a long time from now. What if it doesn't work out? What if $1 million in 40 years isn't worth as much as it is today? So instead, we take all the riskier options with a much lower potential to actually succeed. I'm going to jump back into the video in just 1 second, but before we do, if you want to learn and build on top of your financial education, we have a free ebook in my Market Insiders company, which goes over how you can start investing your money, how you can start generating cash flow, and how you can start putting your money to work even if you don't have a lot of money to invest. This ebook is completely free and it'll walk you through different investment strategies, how you can start investing, how you can start investing in stocks, how you can start investing in real estate, and how you can start getting cash flow on the money that you invest. So if you want to learn more about how to start investing and you want to build on top of your financial education, this is a completely free guide that you can read and access. So if you want to read the guide from Market Insiders, I got the link to how you can download this ebook for free down in the description below. So yes, you can become wealthy even if you don't make a ton of money. Even if you don't know a lot about money, even if you don't know how to invest, as long as you get started and you can invest your money for long enough. And then as you do that, you keep learning. And as you learn, you apply what you learn. And as you make more, you also work to invest more. The more you invest, the wealthier you can become. Remember, there's 3 things that will determine how wealthy you become: time, dollars, and return. As you make more, you can invest more dollars. The sooner you start, the more time you have. The return, how fast your money grows, is going to depend on how you learn, how you can minimize fees, and how you can grow the investments that you're making, right? This is all about the speed of money. How fast can you grow your money? And the way that you can grow your money faster is by learning more about money, learning more about investing, building that financial intelligence, building that financial education. That way you can go out and get better returns on your money. If you want to be a successful investor, there are 10 mindset traits that every successful investor has that I'm going to go over in this video. And number 1, if you want to be a successful investor, being avoiding the shiny object syndrome. Now, when I say shiny object syndrome, I don't mean now you take your money and you go out and buy fancy cars and nice things, because that's the attractive thing to